is gold still a good inflation hedge? So, the benefits of recovering from a global pandemic are clear, but the downside is that it leads to inflation, like we've just been talking about. And if inflation really does take hold this year, you definitely won't be able to say that you weren't warned. I've been talking about it. And more recently, even the legend Warren Buffett has joined the growing ranks of nervy inflation watchers. We've seen a very substantial inflation. It's very interesting. I mean, we're raising our prices, people are raising prices for us, and it's being accepted. The costs are just going up and up. Steel costs, every day they're going up. But there's more inflation going on than, quite a bit more inflation going on than people are anticipating or were anticipating just 6 months ago. That was Uncle Warren. Hope you like my Warren Buffett impression. The supply squeeze has meant that commodities from copper to iron ore, lumber, and corn have all skyrocketed. Most of them have seen double-digit increases and they are record highs. We really are in this next commodity super cycle. Gold is often seen as an asset that can benefit from rising inflation. This is because progressively the rising prices of things and actually the decrease in buying power of cash go hand in hand. And inflation progressively reduces the buying power of cash. That means that you can actually buy more gold with that cash, you see? The fact that this can happen, or this has been happening for so long, has meant that people believe gold to be an inflation hedge. But is this really true, even in today's world? In fact, gold has been a poor protection against inflation. For example, in 1975, when inflation was at 25%, well, gold prices actually fell. Yeah. Since the global financial crisis, the subsequent European sovereign debt crisis, the link between gold and inflation has grown even weaker. Parts of this is down to QE, which was unleashed post-financial crisis, and most of that flowed into financial assets like shares, bond, and property, as opposed to physical assets like gold. So consumers missed out and inflation stayed low. I would go as far as to say, though, that if gold was really a great short-term inflation hedge, then its price in real terms would never fall. That is, adjusted for inflation. Unless there was deflation, because inflation is always going up, so gold prices should always be going up, right? Well, also when things are going really well, investors tend to dump safe haven assets like gold in favor of more risky assets like shares. So again, I don't necessarily think that bodes well for gold. The crux of it, though, is that inflation isn't guaranteed, and in fact, central banks disagree with Uncle Warren about the potential direction for inflation. The Bank of England expects only an uptick in inflation, and this will be modest and transitionary. Over the medium term, economic slack may absorb some of this. There will be deflationary factors in the economy like technology and innovation, so inflation might not be as high, or not all of it might not be passed down. But I guess the upshot of all of that is, regardless of whether or not we have positive inflation coming, you need to hedge against it in some way. And can gold do that? Probably not. So that has been 3 things that happened this week. Hope you've enjoyed it, and I'll see you next time for 3 more things that happen next week.
If you'd like more information on what you just heard, go to slowmoneyclub.com and join the club.